Well, John, I got nothing to talk about, so I'm just going to wind you up and let you go.
Yeah, I'm wound up. I'm already wound up.
Excellent.
Welcome to Hedge Heads, where hosts John Prischman and Ryan Tungseth discuss commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. While no one knows where the market's going, they're not afraid to share some ideas.
Well, John, our cool, rainy weather has continued, and I'm blaming you for fishing in a fishing tournament.
Yeah, I should have quit. I shouldn't have went. It was terrible. Worse than you would have thought, sitting inside saying, boy, I can't believe anybody's fishing out in that. It was worse than that because the fish weren't biting either. They were, of course, for some teams, but no, normally a fun time of year, fun everything. Every once in a while, you get that really cold, and I think everybody out there is sick of this wind. It has nothing to do with fishing, but farming in wind is not fun. Farming in the guys working with calves, none of it's fun at all with this rain and wind. But that's what we needed around here. I mean, it's what was it, 95 for like 5-6 days in a row. This is West Central Minnesota, extremely hot to extremely cold. Not really fun, but we did need the moisture. Big sweeping system, big soaking rain for everybody. Left the grains with nothing to talk about today, but of course they rallied on that. Why wouldn't you? Just the bad news comes.
What do you mean nothing to talk about, John? I mean, planning's got to be delayed. It's got to be too wet out there. We're flooding. We're probably not going to get anything planted the rest of the spring. So unless you got it in.
No, everybody got it in. The planting pace is it's just beyond outstanding. 78% for the corn, 5-year average 73. Soybeans 66, and the 5-year average is 53. So here's where I am at the planting numbers. They released them today. They knew it was probably going to be big numbers because of all the sunshine. The East is still trailing, and that's just not even that much. You have parts of Indiana, parts of Illinois. I'm talking to these guys, even though the wet parts are starting to move. So you look at this, and they don't care after, I always say, about 70, 75%. That's when the focus gets off plantings and on the weather. And then, so this would be the first week you trade weather, and it's raining for pretty much everybody that needs rain. And we're approaching that seasonal. The runway is getting short here. There was a year, 2014, that it was good from day one. And I hope that it's not this year. And that's really the dilemma all these guys are in, is that what do you do with new crop corn sales? If you're lucky, you got some off at 475, 480. You have the insurance levels at 470. So what do you do when the next 3 or 4 weeks are some of the strongest seasonal ups for corn and beans, yet it looks like there's no hope to rally? I mean, what do you do with that mix?
Well, there's always hope for beans, but you never count beans out. But I mean, what are your options? You can if it's seasonal up? Do you really want to sell a call? We've talked courage calls the last 3 episodes. I think that's certainly an option, but you're spending money to not lock in.
And you're owning more, and it's really not the mood that people are in right now.
When there's no hope, right?
They see rain and they see it emerging like it is, and there's not a lot of bullishness out there.
It does look good out there already.
But ironically, the one market, the old crop corn, which would be July, outstanding news nonstop. And that is the contract they're picking on. Look at today. Corn was up 8, up 5.5 in front, up 8. December leading the way on rain. Same market. Up is down and down is up. It doesn't have to make sense. They look like they're going to try to steal these bushels. You have people on Twitter arguing the cash market's weak. It should be at carry. Then you see the export market on absolute fire. So the one piece of good news is the contract that they hate. That's the one they shorted. They continue to add to their shorts substantially. So what we've got this is why you want to be patient, but still looking at this forecast, it doesn't look really threatening. The funds are heavily short corn now. They're heavily short wheat. Not that that's going to have a weather market. They just swept through the Dakotas and Minnesota. The wheat's going to get a good drink here. Kansas is, a big crop. They're harvesting that. Not a lot of good news for wheat, but we're looking for good news for beans and corn. That's generally hot and dry weather. So we have rain, and then, of course, corn goes up 8.5 in the one contract that's probably the most bearish on the board. And that's the way the grains have been trading. That's why people are frustrated with the markets. There's zero predictability about it. The only thing that you want to wait for is this window for better marketings. You start shorting calls, shorting futures right into the teeth of one of the strongest times of year, and generally, you get punished. You go back a couple years ago, we were fishing in Grand Rapids. I remember that. There was no chance for the market to rally. It was downtrending into mid-June, and then it went absolutely ripping up into the like the 23rd, 24th of June, and peaked out. So it was like 5 days of vertical, straight-up corn. So just a few days made all the difference in the marketings there, and it didn't look like it was going to happen. Like it doesn't look like it's going to happen this year. And it changed that fast.
So I do want to point out from the seasonal standpoint, though, that 2 years while we were at that fishing tournament were two completely different results. So 1 year when we were up there, it was like 3 days of straight down for both corn and beans. And the next year, it was straight vertical for 5 days.
Yeah, so
the whole time we were there. So it really depends. Yeah. Yep. It topped years ago.
And that really depends on that's why it's such a wild time period. Like it looks dry or cool and wet now. Looks like it's going to start off perfect. And it is. But that attitude can shift with one longer range forecast. So far, we don't have that. But the market went up anyway today. They're calling it short covering on whatever. Then you have politics. One biodiesel change, and that all of a sudden that's off to the races. That was disappointing last week, and bean oil got hit.
Yeah.
So you just have this very unpredictable market. You have guys out planting. They're just tired of it. They would rather just focus on farming, which they are. But eventually the bankers and everybody are going to have to deal with these prices. You have that guarantee in $4.70 for corn. That's nice for the insurance guys. That I've talked to guys that are 100% insured this year, or as much as they could get. So you have that one life raft out there. That June report's probably not going to be good. It's usually kind of it's the finishing blow to grains in a lot of years. Then when that seasonal kicks in. But what do you do here? So I started looking at the carry in the market, and you have 27 cents between December 25 and July 26. Same exact crop. So what we're looking for is using that carry for strategies. Whether we're going to sell July calls, and you can short futures, sell July calls. Now, selling a call is not a hedge. That's what you would be doing is adding premium to short futures. Let's say you short 470. It's 467, I think, in July. And then you sell a call. Let's say we sell like a 540 call for 30 cents, just for argument's sake, even though it's not there. You could get yourself a $5 futures price, but you take a tremendous amount of risk. And if you short a call, you can't overhedge yourself, meaning if you have 10,000 bushels to hedge, you can only do one call and one futures because that's 10,000 bushels. Now, the short call doesn't guarantee that you're going to get that level or that hedge on. So that's not actually a hedge, but it's a tool guys use to manufacture a better price. Now, I feel like we're watching this and the weather could shift. And then if you started doing that right now, you could really be regretting doing that 2 or 3 weeks from now. Summer has a way of changing very quickly. It can be this wet, cool pattern straight into a very hot. Like we had a preview of what this could be early. Mm-hmm. And if it switches back to that pattern, you're going to wish you would have waited.
Yeah,
so
absolutely.
That's where we're at. It's this runway is getting shorter. The corn looks really bearish in the back end, even though that was a helpful report on May. Everybody's still very scared that the price is going to collapse on them. But who wants this short 440 corn in the middle of May? I mean, that's just historically not a good thing to do. And the market's really forcing the guy's hands. So we keep talking in circles. You surf on Twitter, you look in the newsletters, zero recommendations. Nobody wants to put that out there. Get short this market. And I tend to agree. It's like you cannot give up until you see some weather, especially for the soybeans who don't have enough acreage, whose numbers do look really good. But short term, there's absolutely no reason that this needs to go higher, and the funds want to be short. So it's just a really bad mix this year, makes it really difficult. I've asked a couple of clients point blank, what are your plans for December corn? You're getting different answers. But one common thing I have heard is 460, 470, 480. Whether they're doing hedge to arrives, they want to see those levels, and they are ready to sell. Like that, you can tell from talking to guys. You don't have this holdout. We're going to $6 this summer. They're ready to sell a little bit higher market than this. That is very clear in the discussions I've had, because they're very fearful of December 25 corn falling.
Yeah, the problem is, like, even the premium in the options isn't that great in corn right now. And so even if you are going to sell something, it's not the right time to sell.
Everything's wrong about it.
Yeah.
Yep.
And so that's the tricky part. And thank goodness there's other options. And that's the important part of hedging, right?
Yep.
Is this might not be the year to do it on the board, or you're going to have to get creative on the board, but, use your insurance, talk to the elevator, whatever options might be that way.
Yeah, normally time's on your side, and you want to start when we go into this high implied volatility period, which is when the options get really expensive because of the summer weather. It flares up and then it disappears. So if you can time the calls correctly, selling it, you can get a lot of premium, especially if you want those levels. So let's say a $5.60 or even a $6 July. If you can get that stuff sold for 20 cents, 25 on a weather spike, if you can handle a 625 hedge, worst case scenario, those are good options to sell. Now, there's other guys that are going to be more aggressive that have nothing on, that maybe are going to sell options right now. Historically, we know that it's not right, but those are acceptable levels for hedges to begin on maybe larger farms, where you have to begin somewhere, where you need a substantial amount of hedges and you got nothing going on. That's the only thing that would make sense right now. And you can get money for a 510, 520 July 26th call. It's not like they're free, but you take a substantial amount of risk for it. And that is the problem that we have. But then again, go back to the weather. There's nothing to worry about so far.
Right. And that's the balance. And to your point then, like, it's sitting on the hands, and I'm so sick of saying that, because, we like trading.
Yeah.
But the reality is, if you're hedging for profit on your farm, sitting on your hands and waiting to see what happens is sadly the best option probably right now.
It is this time of year.
This year. It's not always this time of year.
Yep.
It depends on where the market's at. But this year, the way it started, the way prices are now, that's not to say that we shouldn't have a plan. And I think that's where you were going, right?
Yeah, we've been talking about this.
We want everyone to have a plan. Like, when we see this level, we are going to act now. And my example to that is, I had mentioned before, I think it was on an Insider actually, but that I had cattle puts and wheat calls. I was doing the opposite of your joking spread that works every day is to short wheat and buy cattle, but not a real spread.
No,
please don't. You could make money trading that, but I actually did the options the opposite way because I'm a contrarian. But I held that cattle put for 2 days and got out of it. It wasn't some spectacular trade, but we made a little money. So you need to know why you're doing it, what you're doing, and what level you're looking at, so you can jump on it and you can get out as soon as you see. Otherwise, these markets are just too choppy and not enough movement to be effective.
Last year was easy. I mean, we had the in money $5 puts that we were buying for 34 cents around March or something. I don't remember. And then at that point, you have 465, 470, 475, depending on the fills, locked in. That's where the futures were, and then you had your upside wide open, and you didn't have very much risk. Then it dropped right with the seasonals dropped, and it was just kind of an easy thing to do. It was coming down, it was just coming down from higher levels. Never got too terribly high, and the weather was never very threatening. This year, it just feels like they got it too low, too early. They're trying to press July futures down and say, hey, corn's just bearish in general. Why do we have any high-priced one? So they're going to end up trying to steal these last old crop bushels where the farmer feels, I feel they're very sold out. And it's just this negative attitude, which we had in 2012, but it's already not going the direction of 2012. 2012 got hot and dry early, stayed hot and dry, and then when it was going to pollinate is when the real heat came with zero moisture. Regionally, they had one of the best crops here. They caught that 3-inch rain right before pollination. Super lucky around this area, but you could see a disaster happening that year. This doesn't feel like that at all. It's going in early. It's going in fast and easy, just the way guys want it, with great ground. It was getting dry, and now we're wet. And again, the runway gets shorter and shorter, but the weather does shift very, very abruptly this time of year, and we have no buffers according to that May report. So you just don't want to give up on it yet, but it's frustrating because you want to make sure this price doesn't disappear and get even worse. But at the same time, you have politics that could factor in here. One trade deal could make all the difference in the world for corn and soybeans, and that could happen any day, or it might not happen at all. The 90-day window with China could really build on that, or that could get far worse. So we keep waffling back and forth, but that's the market you're dealing with. Just a really wildly unpredictable market. The only thing that's been working in grains is going with momentum, whether you're buying futures when they sell it off, selling puts, and then when it goes up, sell the calls, or if you had bought calls when it was lower. Like, you got to do the opposite of what it's doing, and then when you do get money, you got to take it right away. It's the most unforgiving market that I've seen in grains in a very, very, very long time. Not fun to trade, and not easy to predict what it's going to do day to day. Like, we closed up 5 3/4, 6, I think, in corn today. Was up 8.5 in new crop. It could do anything overnight. We could be up 4, we could be down 4, we could be down 10. It just changes every day, and those momentum traders that entered in September are still around, and they make grain marketing very difficult. But back to what Ryan said, have those orders in. If you're hedge to arrive guys, and you have that at the elevator, have those orders in, have your levels, because it comes at you very fast. And if you don't have those orders in, you tend not to pull the trigger. If the sales make sense and you make money on it, great. I have a hard time with corn courage calls. I have an easier time with bean courage calls, but still, you're raising it. Do you want to get long more? So the grains are just in a difficult situation. We didn't even talk about wheat. With the Minneapolis being the one market we talked about earlier, if we were going to be looking at calls, if it was warmer and drier, well, that just ended. I meant it is not warmer and drier. It can get warmer and drier for Minneapolis wheat, but you got to remember that's planted earlier, so that's even less of a seasonal than corn and beans. If nothing's shaking there in wheat for hot and dry in 2 weeks, which it could switch back to, then wheat is going to have a hard time rallying from here. So you just take it day by day. The market is what it is. You learn to adapt to what you're given, and that's what you're going to have to do this year. The one thing I do hear a lot, though, they're not so concerned about the corn because of the insurance levels. So that's the one good thing. And then at least beans it has to be perfect every day of the summer. On fall, if it falls short of 52.5, let's say we're at 50 bushel beans, which is a very common number that we've seen over the years here recently. That's going to put the bean number about as tight as you want to see it. Tightest in a decade, I think, is what the numbers fall at. So don't give up on it yet. But again, cool and wet, you're not going to find a lot of sharp rallies on that.
No. I was just looking at some numbers and getting distracted, but the one that I saw was that, so for beans, this is the third fastest ever pace. So 2000 was the other one, and 2012 was the second fastest. 2000 was the fastest. And for comparison, this is 10 million more acres. Is that right? Yeah,
the technology gets better every year, but it seems that it topped out of that 51.5, 50. So to see 52.5, you're going to have weather like this, actually, and continue to see that the whole time. but it has not lived up to the yield potential that people thought it would be up by now. You've seen corn creep up, yearly. Even that's kind of flatlined up here, but the beans really flatlined a number of years ago. They're getting it in earlier than ever, and some people call it a fad. Some people say that's the way that it's going to be now. Just they notice that no difference between earlier or later, and some are seeing better results than earlier. So the bean market doesn't have any good news either. We want to have episodes with good news. We had the May report. We talked, a lot about it, but you can't get bullish on markets that the funds want to be bearish on. The only thing we have going for us is a seasonal time of year, and that's really it. But it is powerful. I mean, there's a reason why things happen at this time of year, and the price will change abruptly. That's why back to sitting on your hands. Sometimes that's the best move. And if you're in the markets and you got profits, take them. That's the way that's what it's telling you to do. Don't stick and get stubborn with stuff. But there's just not. I went through the numbers a lot. You're desperate when you're trying to use the entire carry the corn market's offering and selling all that time for not that much money. It's just not a fun year when you're already there in May. I mean, that's a bad sign. I'd rather be going off December and having good deals, and that's just not available.
Not yet.
It can change quick.
Got to be ready for it. Well, let's talk cattle a little bit, John, because that's the market that won't stop. I mean, we want to talk good news. Yeah, fence your field and put some cattle on there.
Yeah, just to get rid of some of this acreage and get cattle. There's going to be cheap. It looks like there's cheap feed everywhere right now, so that's not going to be an issue. So they're just in the wheelhouse of what they've been working for many years. Cheap feed, readily available from west to east, and mostly in the west is the cheapest. And that's, where obviously a lot of cattle are. So the cattle market is $10 under cash. I think we had $220 in the north. Mm-hmm. And now we're $10 under. Now it makes it an unhedgeable board. It was already hard, even with it being kind of close to cash. You're going to pay a lot for any protection. A lot of people are opting for the LRP, livestock risk protection, and they're bidding anything and any number at the sale barn still is happening. They don't care. They feel they're protected. One day the music's going to end, though, and that's something that you have to plan for. They will expand, even though you'll hear guys saying that it's going to be impossible because everyone's left the farm and all this stuff. But when you have this much money involved, you'll get expansion. And Tyson CEO, I think it might have been a different CEO. They say they expect expansion is underway right now. They'd be shocked if it wasn't. I tend to agree. So that's where the deferred contracts will come into play eventually. You're going to want to lock these prices in. Again, it's been wrong to do any hedging from LRP to anything. The guys that did nothing and just sold their cattle at the sale barn after feeding them have reaped all the benefits. But there's plenty of people hedged out there. No way to know this market was coming. This is a demand-driven market, and they're generally the most powerful. At one point, we'll reach a number where that demand will drop off, and that'll be the cattle top. That's the way I'm looking at it. Now, we're seeing topping action in futures for sure. They call it futures. It's not cattle's 220, so we have to be at 220. They'll be looking forward past this 220. So you can have a top like this where it looks underpriced, but then it just keeps getting underpriced, and eventually the cash starts dropping.
It is weird to look at it, say it's topping when it's $10 under cash, but you're right. That's what the market looks like. And it is futures, right?
Yeah, it is futures. It's not, it has to be the cash price today. How's that 218 call I did? What was that, 218.25?
You were close.
I wasn't far off. Now, assuming it's a top, I've made a couple top calls here. But that was just a random number I had pulled out, but it made sense. So 220 cash trade, we're 210 futures. Not a lot of talked about besides the price action looks a lot different than on the way up to the highs. But you just pulled the chart up there. That does not look like an unhealthy chart.
No.
That is a
218 and a half, by the way. So you did nail that. If that's the top, you nailed that.
We'll talk about that all the time too.
Yeah, you're going to bring that up as often as your July.
They're going to call me
puts
218.
that you had.
My new 18. That's going to be my new nickname, 218. That's assuming that's the top. And you just looking at your chart, we've had much deeper pullbacks. Yeah. This is absolutely meaningless. There's no signs of a top in the fundamental side of stuff. But when the funds are done and they want to exit, they're going to get nasty, just like they got nasty in the grains or any of the other markets. As friendly as, you're buddy with them on the way up. On the way down, they're your worst enemy, and that'll happen in cattle too. Who knows what day that's going to be? We're trying to just take it day by day there. I wouldn't go out and buy a bunch of futures up here. At any day, it could give out, or we might be going substantially higher. That's on the consumer. They're going to drive this thing. One day, the Packers will not be able to continue to lose the money that they're losing. I don't feel sorry for them. That's not what I'm saying.
I definitely don't. Not after the last 10 years.
But it is a business, and you have to eventually make money. And if you don't stay in business. And that's the way it'll work here too. Yep. Just like $8.50 corn. If you can't use the product for the price and move it and make money, then eventually those guys that are buying it won't be around. And it'll end ugly one way or the other if it goes that route. Or we could see numbers start creeping up and naturally end it that way. But very unpredictable market. Let's talk about fun market. How about the metals?
Yeah, we haven't talked metals in a long time. What do you know, John?
I get calls on gold all the time. Guys like physical metals. They do. And a lot of people have stuff squirreled away. I have silver. I have a little bit of gold. I should have had more gold. My friend Doug, way back in high school, he was selling gold coins. I think I told you this one.
I just know Doug. That's why I'm.
Yeah, you should laugh. Yeah. And that's why I didn't buy him. It's like and $365 at the time seemed like a lot for a solid gold ounce. And he was, he did his spiel. He's like, you pull out his pamphlet. This is going to explode. And he showed me, it's always about the price of a nice suit is what gold is. And, of course, things are going to go higher. Gold for sure is going to go higher. And I said, sure, Doug. Why don't I skip that? I have better things to spend my money on, which I, of course, didn't as a teenager.
Baseball cards?
Yeah, baseball cards. And who knows what I threw it away on, bikes or whatever dumb thing I was buying. And but Doug was right. $365 looks like a great buy. So we're at that price, $3,000 something. That's what a very nice suit would cost. But there's guys out there that think this is going a lot higher. There's guys that think gold's going to crash. But it's been a steady eddy. I mean, it hasn't been a volatile market where silver's been very back and forth. And that's normal for silver. Very nasty whips. But let's talk about the contract sizes. You have 100 ounces of gold. You have 33.3, I think a third. And then you have 10-ounce micro contracts. So you have a wide variety of choices in the gold. You can get involved in that way. Very common for a guy to buy futures on metals. Platinum, I like that market. It's very close to $1,000. And that was a big thunder crack, wasn't it?
That was, yeah. Well, you guys get to enjoy the thunder.
Yeah,
I want to look and see what's going on outside after that one.
The mic picked that one up. I think it felt like it was on the roof. I finally got my boat top on in time before it absolutely poured. But
that totally interrupted. You were saying 10-ounce. Oh, no, you were going to platinum.
Platinum.
Your favorite. Yeah,
so that's just under 1,000 ounces. So that's definitely, if you're thinking the precious metals have a lot of upside, platinum's the dog. But it's also tied.
It has looked like a dog for the last couple months, John, and that's your
It's market. Very tied to the economy. So when they think, the stock market's going to sell off, we're not going to sell any more cars, boom, it goes down. And it's also not a very good seasonal right now. I think it's about done. And then silver, that's the darling. That's the one that you can find any conspiracy theory you want on silver, and they'll talk about it forever, how the U.S. is holding down the price. And if they let silver go to where it's going to go, it would just be unbelievable. But you have the gold-silver ratio. I mean, silver is very underpriced versus gold historically. There's no doubt about that. So the metals are at least something fun to talk about. The energies are, I don't know, they're pretty boring. We're stuck at 60 for the crude oil. The crude oil puts, there was guys selling them for 47. I think they got $1,100. That premium drained out in 2 weeks from $1,100 premium to $150. I checked on them this morning, and those guys had exited those. But that was something that was kind of flared up very quickly. The premiums jumped substantially. So when these guys, they did it for a hedge on the farm, saying, hey, I dare you to go to 47 for oil. And if you do, I'm going to be long 2 contracts at 47. They got $1,100 on top of that. So you wouldn't lose money. And there was only like 40 some days on these. So if it closed above 47, you get to keep the $1,100. If it closed below 47, you would be long oil. That's short a put. And so, but the way they viewed it, and as an oil hedge, is they needed fuel for the farm. So if it went down to those prices, they would buy it. If it doesn't make it down, they get the $1,100 per contract. So that's, obviously there's a lot of risk. They wouldn't be selling those puts for $1,100 if there wasn't risk there. Oil did go to zero before.
Less than zero, Jen.
Yeah, so it's not like you run out there and do that. But in these markets, you're looking for ideas like that. You're looking for, how do I make better hedges on the farm? That fell into everybody's lap with the OPEC Plus meeting, and they said they're going to pump some more. They want to put U.S. production out of business, which is very common. We've seen this last time Trump was in there. And it created an opportunity. But now that's gone. I don't want to sell $50-some oil. Like, you could sell any put you want. You can sell 55. They're probably close to $1,000 right now. The problem you have is it can easily get down to those prices and the danger levels go up. But when you're at $60 or $59 and it's got to drop another $13 before there's trouble, that's a better setup. Right now, there's nothing in the energies. It seems like it's at a price it likes, $60-some. I don't know what direction it's going to go. What are your feelings on it?
If I had a feeling, I'd probably be trading it because it is interesting me right now. But the levels have been all over the board. And honestly, I shouldn't say all over the board. They haven't moved aside from the one big move down, which probably was predictable that I probably should have traded. Shoulda, coulda, woulda. Yeah. But we talked about this last fall, I think. No, last spring. We talked about oil, that there wasn't anything to it just found its equilibrium, which is what markets are supposed to do. Yep. And last spring, it was like 72. And it just sat there. Between 68 and 74, it sat there for months. I feel like that's kind of where we're at right now. I think that there will be some shocks. I think the economy could affect it, but I just don't see much. The trigger is going to be something that we don't know about, so it's really hard to trade something that.
Yeah, it might be interest rates. They're rising every single day. This is going to factor into farming. It's going to factor into mortgages. They're saying 8% for a 30-year mortgage right now. Yeah, these are numbers that are starting to get 1970-ish. Gold also. You're seeing some very similar things happening that happened in the 70s. I think there were, what was it? They topped out at 14%. I think when my dad bought one of our houses, it was 12, 13.
Oh, when we bought the farm, I know my parents were at 18 something.
And it was devastating to farming. That's the one fear these guys have when you talk to them, that those high interest rates come back. And that's what's happening right now. So that's not a fun market, to talk about if you have to finance stuff. That is going up every day. And it was already seemingly high. Everyone's getting drained by inflation. Now you have higher rates. So back to the broader economy, that's the argument, is that people are getting eaten alive by this inflation, and it's going to start showing up in these markets. But then you get good news, and you get some trade deals, and you get some stuff, and then it gets this optimism. And now we see Dow up to 42,000 again. So we're not out of the woods at all with the interest rate stuff or any of the inflation. The Fed's, doesn't know what to do here. It's boxed in. It controls the front curve, not the back curve. You have to buy your own bonds like Japan did, like we did after 2008. In order to control that yield, you have to buy your own debt. But the front they control, they're indicating they're not going to lower rates anytime soon. And so that's really hard. That's really hard to know what to do for interest rates on the farm. And you're just at the mercy of the markets right now. And right now, every day, the interest rates are going higher.
Yeah, that's not that's not a cause for excitement for me.
No, this is a bad mix. This is just a bad mix. We talked about the grains. Cattle's the only bright spot. If you raise, cattle, if you're buying beef, you're not happy. But the commodities are in a flux here, and it's not fun, and it's really hard to know where it's going to be week to week. The only really steady markets have been cattle up and gold and silver recently up, but gold, and those have been the big drivers. Other than that, every market's different every day. Now interest rates are starting to rise every day. Without a doubt, it's going to influence stuff. But then that could disappear really quick too and start headed lower. So you just don't know you can't plan for long term at all right now. Even personally, we're thinking, as our kids have grown up, do we get out of our house and we don't need a large house for 2 people? But then what do? You get everybody's stuck in the same situation. You got that low interest rate. You got a house you like, but do you need to heat and cool a big house with no kids in it anymore? Before you would just sell it and downsize. Now, if you sell that, you do get, equity's probably doubled in 10 years in everybody's house. But what are you going to move to? $350,000 clunker, on the wrong side of the tracks? Right. That's what you're dealing with here. So
paying 8% interest.
And paying 8% on top of that.
Yeah.
So it's just kind of this weird mix of stuff. And the way that you solve it is just take it day by day. That's all you can do. But not easy markets at all. Very, very difficult markets.
Well, on that happy note, John.
What are you going to do? Land prices keep going higher. So
there you go.
If you're bidding land, you're gonna pay for it. That's the one thing that surprisingly hasn't been affected by it at all.
It is interesting. Rents, if you're renting land,
Yeah, how are the numbers going to work next year if corn's a lot lower than this? But you can't think about that. Things change really quick in commodities. That's why I show up every day. What looks bad one day all of a sudden presents a very good opportunity.
Well, look at beans from, beginning of March up until today.
Yeah.
Beans look terrible, and now I like the bean market. I haven't decided what I'm going to do with it, but
if the weather was
watching. Well, I guess I have calls. I'm also watching puts. So what do you do?
Yeah, what do you
strangle
them? They would be very flinchy with threatening weather, and just know that. Like the beans wouldn't need much of an excuse, or the grains in general. They're heavily short in front of a summer. Historically, that's a bad trade for funds. So if there's a reason to cover, it's going to go up a lot and really fast. We're still looking for that reason, and I want it to be there. I want to be a bull this year. I think that if this goes down and we put a bunch in the bin, we're in deep trouble with the South American production. I think it's not going to be good. I don't think we're going to live up to the demand numbers. But don't rule out trade deals either. I mean, that's something that's not normally there that really could change everything overnight. They could have U.S. policy and politics. I have a client out there that believes, and I believe it too, that major price shifts in grains have always been tied to policies and politics. And you saw that with the soybean meal embargo. You've seen that with Russia and the wheat. And you've seen it with the ethanol in 2008. Bush in that famous speech, I remember it still. Corn was up very sharply that night that he gave that speech, and it never let up. I mean, it went to very high prices after that speech. So that's generally what changes stuff, and that easily can happen again this year. That's where we're at. I'm hopeful, but every day that passes, there's more rain in the forecast that gets to be harder, but we're only, May 19th? We got a long ways to go, and things change quick.
Absolutely. Well, let's call it a day there, John.
Time to wrap it up.
You got a phone number people can call you at?
218-731-1578.
Thanks, John.
Sure. Just read about the ag stuff, about how just the software updates and you buy equipment and it drops off so quick, even used stuff. And, it's just going to be, it's not like the old farming. There's just so much leverage.